Rules Committee come to order, and thank you very much for joining us this afternoon. The Rules Committee today will be considering H.R. 1116, the Taking Account of Institutions with Low Operation Risk, or Taylor Act of 2017. H.R. 4263, the Regulatory A-Plus Improvement Act of 2017, and H.R. 4545, the Financial Institutions Examination, Fairness, and Reform Act. Banks and credit unions are currently regulated under a one-size-fits-all regulatory approach, regardless of their size or the risk that they pose to not only themselves but to the economy. This often means that regulations designed and intended perhaps for big banks also apply to many small community and independent banks or credit unions. One size fits all probably fits few. H.R. 1116 addresses this disparity by appropriately tailoring regulations to fit a bank or a credit union's business model and risk profile. An appropriately scoped regulatory regime permits banks and credit unions to focus their time, resources, and actually their success on what they're supposed to do, and that is to serve their community. The second bill under consideration, H.R. 4263, would increase the offering amount that companies can offer under the Securities and Exchange Commission's Regulation A from $50 million to $75 million, adjusted for inflation by the SEC every 2 years to the nearest $10,000. Allowing small companies to pursue a Reg A+ offering enables companies to raise money from a wider range of the investing public rather than the traditional venture capital and accredited investors. This will help small companies grow their business by giving them the available resources that they need to not only grow, to add more employees, but to do as their mission statement is, to serve the public. The final bill under consideration, H.R. 4545, creates an independent and transparent review process for financial institutions, examination process that will benefit examiners, financial institutions, and the people or customers who they serve. The current system does allow financial institutions to appeal the decision, but the process is secretive and there's little accountability on the part of the regulators reviewing their own decisions. This bill will clear and make available a concise system with an independent auditor that will help ensure a more fair and transparent product in both the exam process and the appeals process, which should be to the benefit of all of us. So without objection, I'd like to welcome my friend, the gentleman from Dallas, Texas, Chairman Jeb Henserling, and the gentlewoman, my friend from California, Maxine Waters, to our first panel. And anything they have in writing, as always, would be welcome for our awesome stenographer to make sure that she completes the record transcript according to the facts that were presented. And we look forward to hearing from your testimony. Before we go any further, Mr. Chairman, I'd like to, if we can, defer to the ranking member, the gentleman from Massachusetts, for any opening statement. Gentlemen, choose to make.
Well, thank you, Mr. Chairman. I just want to welcome our two witnesses and say in advance that I'm going to agree with every single word that Maxine Waters says tonight. I yield back.
Gentleman yields back his time. You know, that comes with high praise, Ms. Waters. I just told you last week I was looking forward to seeing you, and bingo, here you show up here today. Before we go too far, I would like to, if I can, acknowledge that we've got a full house today, and a lot of people from a congressional district that Congressman Henserling represented part of, Garland, Texas. I now have the awesome responsibility of representing Garland, Texas. It is a community that is a thriving suburb of Dallas, Texas, or Dallas, Texas is a thriving suburb of Garland, Texas. We have the mayor and the former mayor. We have Mayor Doug Athis, who is with us. We have B.J. Williams, who's now in the city council. We have Robin Athis, the mayor's wife. We have Shay Athis, who is Mr. Chairman, an Eagle Scout from Garland, Texas, as you and I are. Bailey Herbert, Julian Humphrey, Catherine Sinclair, Esther Capo and Patricio Gonzalez. These are young students who came to Washington from Garland as a result of Garland trying to mentor young people with what they are headed to. And Jeb, I found out their leader went to Churchill High School, San Antonio, with your wife and myself. She was probably 30 years, 40 years behind me, but nonetheless, glad to have her. And also a constituent family from Dallas, Texas, Betsy Cummins, Alden Cummins, Carden Cummins, and Caroline Cummins. And I found that Carden was very comfortable standing in my chair today. I said, just act like you're at home and jump up on the furniture. His mother gasped, and he jumped right on up there, and we had a great time. So glad to welcome people from Dallas, Texas, and Garland, Texas, and I want to thank them for taking time to be with us today. Mr. Chairman, we're delighted that you're here bringing us the work for the week. The gentleman's recognized.
Chairman Sessions, thank you very much. Other members of the Rules Committee, and thank you. It's nice to be surrounded by good folks from back home in Dallas and Garland that I continue to proudly represent as part of the 5th District, notwithstanding the fact that you took most of Garland. Mr. Chairman, I still have a few precincts, and I'm very proud to represent them. Thank you for the opportunity to testify today on yet 3 more bipartisan Financial Services Committee's measures, H.R. 1116, H.R. 4545, which were both introduced by the gentleman from Colorado, Mr. Tipton, who is a real leader on our committee and trying to bring terribly needed regulatory relief and pro-growth measures to our community banks and credit unions. And in addition, H.R. 4263 introduced the Reg A Plus Improvement Act introduced by the gentleman from New Jersey, Mr. MacArthur. Mr. Chairman, these are very important bills that, again, will provide regulatory relief to our financial institutions, which will help to fuel an economy that actually works for the American people. As you know, Mr. Chairman, we have received some good news. We appear to be back to 3% economic growth. We have an unemployment rate at a 17-year low, and finally, we're starting to see paychecks rise once again. We've seen the greatest increase in wages in approximately 8 years, and this is all good news. But we need to make sure that our community financial institutions can not only survive but thrive. Mr. Chairman, H.R. 1116 directs the federal financial regulators to tailor their regulations to entities based on their complexity and risk profile, while also providing needed transparency in this process by requiring that they report to Congress on the specific actions they have taken to tailor. Mr. Chairman, this is just plain common sense, and our community banks and credit unions, frankly, are quite desperate for Mr. Tipton's bill. I do not believe that to be an exaggeration. Because as you know, Mr. Chairman, we still continue to lose, on average, 1 community bank or credit union every other day in America, and they are not perishing of natural causes. Next, H.R. 4545 builds on this idea by fostering transparency and accountability among regulators related to their examinations by improving the timeliness of examinations and creating a new, more independent examination appeals process. This is basic fairness. This is due process, Mr. Chairman. The new Office of Independent Examination Review will ensure accountability and fairness by providing the right to obtain an independent review of a material supervisory determination contained in a final examination report. Again, this is fairness. This is due process. Finally, H.R. 4263 builds upon a very successful provision of the Jobs Act by increasing the amount of capital that small businesses can raise under what is commonly known as a mini IPO, which is known as the Reg A Plus offering, which is a less costly alternative for issuers to raise capital than a traditional IPO. In doing so, Mr. Chairman, Mr. MacArthur's legislation will help inject more liquidity and opportunities for small businesses to acquire the capital they need to grow, and in some instances go public with sufficient capital to better shoulder the corresponding regulatory burdens. Now that I've explained to you what these bills do, allow me just to take a couple of moments to explain why these are important. Just one little history lesson I'd like to share with the committee. In 1978, there were two gentlemen who met in a coffee shop in Los Angeles to discuss their plans for starting a new business. And the business they envisioned stemmed from their own experiences as avid home renovation do-it-yourselfers. These entrepreneurs saw an opportunity in the marketplace for a home supply superstore staffed with professionals to assist consumers with needs that they had for remodeling. They named their hardware superstore Home Depot and opened their first location in Atlanta, Georgia in 1979. From that idea in an LA coffee shop, Home Depot has grown to 2,200 stores spanning across 3 countries and employing more than 400,000 individuals. Bernie Marcus, one of the men from that coffee shop in LA, noted that in the early days, Home Depot was undercapitalized and the business's growth was stagnant. But fortunately, they found a small banker in California who extended a $5 million line of credit that made all the difference at this critical stage of their development. But as Mr. Marcus has explained on a number of occasions, due to the onslaught of all the new banking regulations, that bank could not and would not open their doors to Home Depot today. And so, Mr. Chairman, Home Depot is both the example of the power of capital, but also a cautionary tale of the dangers of stifling regulation. Who knows where or when the next Home Depot will come, but one thing is for sure, there will be 400,000 fewer jobs, 400,000 fewer Americans employed, and 400,000 fewer consumers in the rest of the American economy had Home Depot not have secured that valuable line of credit in 1979. So, Mr. Chairman and members of the committee, the regulatory burden does make a difference. And so traditionally, it is our small banks and credit unions that have capitalized the small businesses of yesterday that become the big employers of today. So we need to make sure that, again, the next great American company is given the same opportunities Home Depot was in 1979. Again, these are bills that our community bankers and credit unions desperately need and want. These bills are for the hundreds of thousands of Americans who will constitute the workforce that, again, we may see with, who knows, the next Amazon, the next Home Depot, or any of the great American companies that we see today. Again, Mr. Chairman, these are 3 bipartisan bills, which we frequently bring you to the Rules Committee, and we look forward to answering any of your questions and moving these bills expeditiously to the floor. Thank you very much.
Mr. Chairman, thank you very much. Ms. Waters, we're delighted that you're here. Gentlewoman's recognized.
Thank you very much, Chairman Sessions and members of the Rules Committee. It seems that every week, members of this committee are asked to consider yet another attempt to weaken guardrails Congress imposed on Wall Street and the financial services industry to prevent their recklessness from ever threatening our livelihood or economy again. And this week is no different, except in one regard. 10 years ago tomorrow, Bear Stearns collapsed, and the Federal Reserve provided $25 billion to help J.P. Morgan acquire the investment bank's portfolio of toxic subprime mortgage-backed securities. I remember March 14, 2008, and the chaos that would ensue over the coming months as 11 million people lost their homes to foreclosure. The unemployment rate jumped to over 10%, and Americans lost $13 trillion in wealth. Congress rose to the occasion and passed the Dodd-Frank Act, and the country is stronger for it. Banks are healthy, safe, having raised $750 billion in capital. And with this good health, they are lending. Commercial lending is up 80%, and banks are experiencing record profits. But Dodd-Frank is a victim of its own success. By preventing another crisis, it has given Republicans in Congress and bankers on Wall Street the false impression that the law is no longer needed and that Wall Street can be trusted to police itself. Many of the bills on the floor this week are the latest examples of congressional Republicans' selective amnesia. So I'll begin with H.R. 1116, the Taylor Act. This act would require on the Federal Financial Institutions Examination Council, FFIEC, which is composed of the 5 banking regulators, including the Consumer Bureau, to tailor new regulations and regulations issued in the 7 years since passage of Dodd-Frank in a way that limits the regulatory compliance impact cost, liability risk, and other burdens of thousands of financial companies without considering how these rules protect consumers on the broader economy. 1116 tilts the scale way too far to the industry side of the equation without allowing for appropriate consideration of the public's interest. If enacted, this bill would enable megabanks like Wells Fargo and predatory lenders like payday lenders to easily challenge any revised rulemaking in court if they felt a regulation was not, quote, uniquely tailored, quote, unquote, to their business needs. Importantly, the legislation includes no similar mandate that regulators consider the benefits of rulemakings, like the benefit of avoiding the Great Recession of fewer debt traps designed to swindle someone's hard-earned money. Mr. Chairman, this is the second bill in 2 weeks that my counterparts on the other side of the aisle have moved to the floor that would impose an unbalanced review that favors industry's wishes over consumers. 25 national and state groups signed a letter opposing the bill, including the AFL-CIO, Americans for Financial Reform, Consumer Federation of America, NAACP, the National Consumer Law Center, Public Citizen, and U.S. PIRG. Mr. Chairman, the second bill, H.R. 4545, the so-called Financial Institutions Examination, Fairness and Reform Act, is no better. The bill would allow financial institutions to more easily challenge adverse findings by their bank examiners, which can lead directly to disciplinary or corrective actions for these financial institutions. Now, Democrats have heard community banks and credit unions express concerns about their ability to get timely exam results and appeal them, and I agree that target improvements to the exam process would be considered for the smallest banks. It is for this reason that I submitted an amendment to limit H.R. 4545's scope to only smaller institutions. Without this amendment, the bill's broad language would allow megabanks like Wells Fargo and non-banks like the Consumer Bureau's supervision, like Equifax or payday lenders, to avail themselves of the bill's reforms. If anything, bank regulators have not been tough enough in examining and supervising Wall Street, megabanks, and predatory lenders, and more should be done. The last bill before you today is a measure that, while intended to help, could instead harm the long-term prospects of certain small businesses, as well as the community that wants to support these businesses. H.R. 4263 would arbitrarily and prematurely increase the amount of stock a company can sell to the public each year using an exemption that lacks important investor protections and sufficient oversight. When Congress passed the Jumpstart Our Business Startups Act, we expanded a streamlined process to raise money from the public known as Regulation A+. We capped the amount of stock sold in any given year at $50 million to ensure that only truly small companies would use this, but also so that such companies would eventually grow and transition to the registered markets with deeper pools of capital available and stronger investment protections. H.R. 4263, however, now would increase the threshold to $75 million, despite the fact that nearly all of the companies using this exemption haven't raised anywhere close to the current amount or current limit. Also, Congress already directed the SEC to review and, if appropriate, adjust threshold every 2 years, and to date, it has declined to do so. But what is most concerning is that this bill could pose further risk to investors and reduce incentives for companies to enter the public markets through a registered offering. Regulation A plus securities are already very high-risk investments, in part because of the weaker investor safeguards. According to a February 2018 article in the Wall Street Journal, 7 out of the 8 companies that listed their securities on an exchange in 2017 following a Regulation A plus offering are trading on average 42% below their offering prices. By comparison, companies that went through a traditional initial public offering, or IPO, in 2017 traded on average 22% below their offering prices. Before rushing to raise this threshold, Congress should more closely consider whether we may be causing more harm than good. So, Mr. Chairman, these 3 bills backtrack on the progress we have made since the financial crisis to repair our banking system, ensure strong rules of the road, and restore investor confidence to our markets. So I would urge you to reject the measures before you today, and I yield back the balance of my time.
Ms. Waters, thank you very much. The opportunity to have each of you here today, and in particular, Mr. Chairman, your strong words of support for Mr. Tipton in his bipartisan piece of legislation, including H.R. 4545 that was entered by Mr. Tipton and the gentlewoman from New York, Carolyn Maloney, I think represents a strong desire from people that I hear back from in Garland, Texas, of which there are a number of people here, of which you represent a part of Garland also, Mr. Chairman, and other places within the 5th Congressional District of Texas and the 32nd Congressional District, which also includes Dallas, Texas, as you do also, about the capital requirements that really inhibited job growth, job creation, and the story that you gave around about Home Depot was most interesting. And a lot of it's not only with the amount of money that's got to be in reserve, but it's the downright, they're keeping them small or keeping them in their place, and the rules and regulations are on top of them. They really can't make the money available to people who really have good ideas. And I just want to think that this 2.6%, which is now the increase in pay, which, as you said, has been flat for some 11 years, just rising, means that more people will have take-home pay. What I'm hoping is that a good number of people will also see maybe they want to go start their own business, small business. We start that way. Home Depot started that way. But we've got people here that are young students that just take for granted that Home Depot's been around forever. It's not. It was somebody's idea, which was a big dream, that took off because they could get the money, they could get the financing, they could get the support because they had a good product. And this is the side of the world that I live on, where people have great ideas and want to do something with their idea. By the way, my son, Alexander Sessions, an Eagle Scout, also Down syndrome young man, is in his 4th month of working for Home Depot in Dallas, Texas. And so Home Depot does not just go and provide great services, they provide opportunities for disabled people. And Home Depot, among others I'm sure, but Home Depot is a community server, and they care about people, so that makes them special in my heart too. What a story to tell. 1979, they got some money, and today that idea might be frozen in place if a good idea couldn't find the money it needs. So I appreciate the story, appreciate what we're doing. I think people who are in this room, younger students, need to hear you got to be able to have capital with your idea to make it fit. Mr. Chairman?
Thank you very much, Mr. Chairman. I just want to welcome our two friends here. They always give good testimony and seldom agree, but we always illuminate both sides of the argument quite well. So I want to thank them for that. I know how I'm going to vote on this issue. I think once again the chairman has persuaded me to back his legislation. But again, I genuinely appreciate both of you being here. You're excellent members of Congress. You both reflect very well on the Congress of the United States. So with that, I yield back.
Gentleman yields back his time. Thank you very much. Gentleman from Massachusetts.
I again want to thank both of our witnesses. As I said in the beginning, I intended to agree with everything that Maxine Waters said. I do, and I appreciate. I share many of the same concerns that she does. I would just hope that this being the Rules Committee, that we will make her amendment in order, and that we will make some of these other amendments in order. I hope I would like to suggest an open rule, but I'm not going to hold my breath on that. But I hope at least the amendments that are offered, in addition to the technical corrections amendment, are made in order, so members can have that discussion on the House floor and have a vote. But again, thank you for being here. I yield back my time.
Gentleman yields back his time. Thank you very much. The distinguished gentleman from Louisville, Texas, does not seek time. The distinguished judge from Florida.
I appreciate it,
Yes,
Mr.
sir.
Chairman. I associate myself with Mr. McGovern's remarks. I do have a very simple question. Either of our witnesses, please respond. I bank with Bank of America, Chase, the Congressional Credit Union, and a credit union in my county, Bright Star. More interested in the larger banks. Since Dodd-Frank, have any of the large banks lost money?
I don't know about, if I could, Mr.
Yeah.
Hastings. One, if you bank with that many banks, you got more money than I do, but we'll put that to the side. I don't know about their individual balance sheets. I will say since the passage of Dodd-Frank's, the big banks are bigger. They have a larger slice of the banking pie. Their balance sheets are bigger. They've done quite well. The community banks and credit unions, on the other hand, have not done so well, and on average, we are losing one approximately every other day. They're having to consolidate, and if you speak to them most often, they will cite the regulatory burden that they are having to take people out of, convert people from loan officers to compliance officers. They don't feel they can serve their communities anymore, and that's why it's so vital to have the Taylor Act, because we were told that Dodd-Frank would not adversely impact credit unions and community banks, but it has. I assume it was an unintended consequence. Even Mr. Frank, former Chairman Frank, has said, and you can find the quote yourself, but essentially that, yes, the full regulatory burden should not be imposed upon our community banks and credit unions because they weren't part of the problem.
Another question then I'd ask you, Mr. Chairman. Do either of these measures that you bring here today increase the deficit?
To the best of my knowledge, none of them increased the deficit.
All right. Ms. Waters?
I'd like to speak to the question that
question.
you asked, the first question. And I had it in my opening statement. Banks are healthy and safe, having raised $750 billion in capital. And with this good health, they are lending. Commercial lending is up 80%, and banks are experiencing record profits.
Right. Yeah, and that's the point that I wanted to make. And that, you know, we go back and forth. We are here now on the 30th measure from y'all's committee. And you haven't had a whole lot of hearings, but it has become seemingly the work of this committee that we are hearing everything coming out of the Financial Services Committee and very little from the other committees of jurisdiction here in Congress. No fault of either of yours, just the simple fact that that's what's going on. And most of us know that a large portion of the measures that you've brought here, of the 30, are dead on arrival when they get to the Senate. And I just am curious, you know, with all the things that we need to do here in Congress, all of the deadlines that haven't been met, again, no reflection on either of you, the simple fact of the matter is that we have more work to do than just regulatory work. And I agonize about us not doing anything at all about guns, not doing anything at all about DACA. And like Mr. McGovern, I agree with Ms. Waters, and if anybody sees the president, tell him that I think Ms. Waters is brilliant. Thank you. I yield back.
Mr. Hastings, could I simply address one
Yes, of
point?
course,
I think I heard you assert that these bills are likely dead upon arrival. I would just
Some
simply,
of them.
I would just make the point, I think you know that the Senate is currently debating their own banking bill, and if you look at it closely, many of the provisions within their banking bill started out on the House side. They were bipartisan House measures, and they've ended up in this
Good point.
Senate bill.
Good point. Thank you, Mr. Chairman.
Yes, sir, and thank you, Judge. And by the way, I'm sorry, what did you say now that we need
I
to tell
said
the
if
president?
anybody sees Donald Trump, tell him I think Ms. Waters is brilliant.
Thank you, sir. We wanted to make sure we got
All
that
right.
one right, and we'll make sure he does. Thank you very much. The gentleman from Georgia.
Thank you, Mr. Chairman. I don't have any questions, of course, for our chairman and ranking member, who are our regular frequent guests up here and bringing good stuff as they are. There it goes. But I do have something the chairman, I think, would be interested in. Chairman, today in the audience, someone who is near to my heart. She was my first legislative director. She came over to you. Now she has went to Mr. Hensling's. She has something new on her hand.
Yes, she does.
She is newly engaged, and she's newly engaged to my chief of staff, Brendan Belair, and Miss Jennifer as newly engaged. So I just wanted to
Inside
recognize
deal.
that fact
Inside
as we
deal.
go along. So with that, with congratulations, and I just wanted to yield back.
The gentleman is correct. She did come. Jennifer did move to our office. She did such a great job. She got promoted by the gentleman, the young chairman, Chairman Henserling, and I suspect is going to sport a nice ring, and she showed it to me a minute ago, so she may flash it another time. But we're really, really proud of Jennifer, and congratulations. The gentleman from Washington.
Well, thank you, Mr. Chairman. I don't know what to say. I can't top that, Jennifer. Sorry. I just want to thank Mr. Hensling and Ms. Waters for being here and addressing some really important issues. You know, as I've said many times, I represent a rural district. We have a lot of smaller banks, community banks, credit unions, and I got to tell you, in numerous meetings with these good people, I hear the very similar story, that they feel that they are being punished for actions they did not commit. You know, that they were not part of the problem that Dodd-Frank was trying to address, and has really trying to comply with all these new rules has really negatively impacted their ability to not only make credit available, but affordable to people all across my district, I'm sure across everyone's districts. And so I appreciate all of these good efforts to try to speak for these smaller institutions that are so critical to the economies of communities across the country. And I believe that these are, maybe not every single one of them, but these are bipartisan effort as well. And so that certainly is a refreshing thing that is recognized on both sides of the aisle, that we need to do something, that certainly there were problems, but let's not punish those who are not responsible for those problems. And so thank you very much for bringing this forward. I'll yield back, Mr. Chairman.
Gentleman yields back his time. Thank you very much. For the young people in the audience, the next person that I'm going to acknowledge is the daughter of the former Vice President of the United States, Dick Cheney. She is a star unto herself. I'll give her that. So I'd like to make sure Donald Trump knows we think Liz Cheney is awesome. The gentlewoman from Wyoming is recognized.
Thank you very much, Mr. Chairman. I'm also the daughter of Lynn Cheney, so
Okay, all right. I'm sorry.
give her a short shrift. But
For those of you, she is the daughter of Liz Cheney, who is Lynn, who is a stellar, not only person in her own right, but has been involved in many policy issues in this country, And I will apologize to your mother when we get out of here.
Thank you, Mr. Chairman. I don't have any questions. I just want to echo my colleague from Washington State. You know, every single time I'm home, again, just 2 days ago, I hear from people in communities all across our state how just strangling the Dodd-Frank set of regulations have been, and how crucial it is. They're very pleased that we've moved on the House side broadly on this. They'd like to see the Senate move on it, and to the extent that we can take steps in addition to the work we've already done, including this legislation, it's really crucial to help make sure our community banks survive and are able to provide the kind of credit we need for local businesses across the country. So I want to thank Chairman Hensterling very much for bringing this bill forward. Thank you very much. I yield back.
Gentleman yields back your time. Thank you very much. Mr. Chairman, you are under pressure, and I understand that, to produce legislation that will allow the free enterprise system to further have the flexibility to meet the needs of the public. And I would take from your public report, HR Report 1155888, taking account of institutions with low operational risk, Act of 2017, quoting on page 3, the weight and burden from increased bank regulations falls disproportionately on bank customers. The weight of this is an impediment to job growth, job creation, and falls on customers who have to pay more. And if the bank is failing, you mentioned there is an institution that fails every day or two, that means that there are customers who are without chances and opportunities. And in particular, you highlighted credit unions that are community credit unions and independent and community bankers. And I would say that if we're accused of trying to help people, we're trying to help the customer. And that is a worthy cause. So I want to thank you for taking time. I note that the distinguished gentleman from Georgia has just arrived. Does the gentleman seek time? Gentleman does not seek time. Thank you very much. The gentleman's associate, his staff director, said the gentleman from Georgia did not need time. So I also want to acknowledge an awesome staff member of mine, Megan Porter, who we call Miss UVA, for taking time to be with us today. And Megan, thank you very much. As always, I'd like to ask that you leave whatever you brought in writing for our awesome stenographer, and I know she appreciates that also. So thank you very much. This panel has done its job today. Thank you.
I think we have an amendment.
Okay.
Thank you very much.
We would now be open and available for any member of Congress that would choose to give testimony. H.R. 1116, H.R. 4263, H.R. 4545. Seeing none, this now closes the hearing portion, and the chairman now be in receipt of a motion from the distinguished gentleman from Oklahoma.
Mr. Chairman, I move the committee grant H.R. 4545, the Financial Institutions Examination, Fairness, and Reform Act, a structured rule. The rule provides 1 hour of debate equally divided and controlled by the chair and ranking minority member of the Committee on Financial Services. The rule waives all points of order against consideration of the bill. The rule provides that the amendment printed in Part A of the Rules Committee report shall be considered as adopted, and the bill as amended shall be considered as read. The rule waives all points of order against provisions, and the bill is amended. The rule makes in order only the further amendment printed in Part B of the Rules Committee report, if offered by the member designated in the report, which shall be considered as read, shall be debatable for the time specified in the report, equally divided and controlled by the proponent and unopponent, shall not be subject to amendment, and shall not be subject to a demand of division of the question. The rule waives all points of order against the amendment printed in the report. The rule provides one motion to recommit with or without instruction. Section 2 of the rule provides for consideration of H.R. 1116, the Taylor Act of 2017, under a closed rule. The rule provides 1 hour of debate, equally divided and controlled by the chair and ranking minority member of the Committee on Financial Services. The rule waives all points of order against consideration of the bill. The rule provides that the amendment printed in Part C of the Rules Committee report shall be considered as adopted, and the bill as amended shall be considered as read. The rule waives all points of order against provisions in the bill as amended. The rule provides one motion to recommit with or without instructions. Section 3 of the rule provides for the consideration of H.R. 4263, the Regulation A Plus Improvement Act of 2017, under a closed rule. The rule provides 1 hour of debate, equally divided and controlled by the chair and ranking minority member of the Committee on Financial Services. The rule waives all points of order against consideration of the bill. The rule provides that the amendment printed in Part D of the Rules Committee report shall be considered as adopted, and the bill as amended shall be considered as read. The rule waives all points of order against provisions in the bill as amended. Finally, the rule provides one motion to recommit with or without instructions.
Thank you very much. You've now heard the motion from the distinguished gentleman from Oklahoma. I'll yield myself 1 minute. H.R. 4263 and H.R. 1116. There were no germane amendments submitted to either of the bills. We've offered a motion to recommit for each of the bills. H.R. 4545 makes an order one amendment, the gentlewoman from California, Ms. Waters, and makes an order a motion to recommit. Would now open up the floor to any amendment or discussion to the bill. Seeing none, the vote will now be on the motion from the distinguished gentleman from Oklahoma. Those in favor signify by saying aye. Aye. Those opposed, no. The ayes have it. The ayes have it. Accordingly, the gentleman from Freedom, Colorado, Mr. Ken Buck, will be handling this for Republicans.
And the gentleman from someplace in Colorado, Mr. Polis, will do it for the Democrats. Yeah.
The gentleman from someplace in
Boulder, okay.
Boulder, it is
Boulder,
Boulder.
I don't, yeah.
He is bold. He is bold. We'll be handling this for Democrats. There is now a question on the floor that the distinguished gentleman from Florida would wish to ask.
Are we meeting anymore this week, Mr.
Yes, sir, and I thank the gentleman for asking. I never thought you'd ask, Judge. Our next meeting is scheduled for tomorrow at 3:00 p.m. on H.R. 4293 and H.R. 4061. I would also just put something that the gentleman would ask and would want to know, that we know that we've got to do our work very soon, and the negotiation on the funding package is still being worked, and I would anticipate that we're getting closer and closer, but would remind each of us that when that measure does come forward, there will be, things will be posted, but you'll be notified immediately. And regardless of when that is, I look forward to seeing you. Great. Thank you very much. This completes our work for the day.